Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. Let's talk about multi-time frame drop-down, squinting through the eye of a needle, bullshit analysis. So today I'm taking a left turn at Albuquerque and sharing a discussion on a recent podcast interview about the nonsense that is multiple time frame analysis. So sit back and enjoy my extended rant on the subject, and I'll see you at the other side. Hi, it's Phil. Welcome to the Anti-Investor Swing Trading Podcast, where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you don't make the same mistakes that I made. And from now on, I'll be your personal swing trading mentor to show you the way. So if you're ready, let's do this.
Multi-time frame analysis. Let's kind of highlight that, because we've done our news, we've done our round robin of all the news and everything else, but let's talk about the complete bollocks that is multi-time frame drop-down analysis.
So was that a handing over of the baton there, Sean, or are you okay?
That was a handing over the baton, and I'm tapping my watch, making sure it's fucking working. It is ticking. But
you know, okay. Some clues here, because your segues are absolutely seamless all the way through this show, Sean. It's hard to tell sometimes, I've got to admit. No, the multi-time frame analysis, what is it? Is the name suggests it's where you use multiple time frames to do some sort of analysis. And I'm sorry, but I do believe it's bollocks. Absolute, utter, not even hairy bollocks, Sean. Just, you know, just.
It could be shaved, unshaved, it could be weaved, it doesn't matter. Either way, it's a pair of bollocks. Okay, so yes.
Yes, it's now the contradiction.
I put that mental image in his mind. He can't focus on
I'm going to have a cold shower after this. Anyway, the contradiction is: does it work? Yes. Is it necessary? No. Is it discretionary? Yes. Is it confusing? Yes. Can it be replicated by most people, or anyone for that matter? No, it can't be, because there's contradictions between timeframes. And just because somebody, I don't know, let's just call him Van Tharp, just for example, completely made up name, of course, just because somebody wrote about it, 20, 30 years ago, in the back of a book, who's not a trader, he's a psychologist, as a methodology to use in trading, just because it was written about in a textbook doesn't mean that it should be used or can be validated. Now, the trade-off with using it is you've got to spend a lot of time doing it. You've got to start off at, say, the weekly, the daily, the 60-minute chart, or the daily, the 60, and 30-minute, 5-minute, whatever it is. A triple time frame approach is what's used, this drop-down analysis to find the best opportunities and finesse opportunities. But again, I come back to these points, Sean. It's like, does it work? Yes. Is it useless? Yes. Let me be more specific. Is it a useless waste of time? Yes. Because I know, you know, and one of the things that we're huge advocates of is one time frame strategies. So I know it's not necessary. We've validated our own systems and algorithms, because at the click of a button we can validate all our reports, all our strategies with multi-decade reports that prove it's not necessary. But then the contradiction is, can you use drop-down analysis? Can you use this triple time frame approach? Does it work? Well, yes. Is it confusing? Yes. Can anyone do it? No, because it's confusing. And the bottom line, the kind of the thing that encapsulates it is it's discretionary. And that's what we're always trying to remove from our own trade. And this is the kind of the route that we both started separately and independently many, many decades ago now, was of trying to remove the discretionary decisions from my trading. And one of the first steps of that was removing the drop-down analysis approach. It's, again, the contradiction is it does work for some people, but it doesn't work for all people all of the time. So what does work for everyone all of the time? A single time frame approach. Great. So that means that it then becomes time efficient when you're not having to, again, doing the bunny fingers here behind the microphone, Sean. I'm sure you can see it.
Absolutely. Crystal clear. I can see it from 6,000 miles.
I forgot what I was going to bunny fingers now. Doing analysis. You're doing this analysis and you're analyzing the charts, but then you're going to spend hours doing it because you've got to go through the weekly, the daily, the 60, or whatever combination of time frames you're looking at on everything that you're looking at. Now, the the kind of the next step of that is, well, if you are doing that, again, there's nothing wrong with it. It does work for some people, and some people make it work. Personally, I did do it. I have done it. I'm sure we've all tried it at some point. But the reality is you're going to have conflict and contradiction across all the time frames. And certainly my observation was when they all come in alignment, when you've got a dip buying opportunity on the weekly, the daily, and say the 60-minute chart, or the daily, the 60 and the 5-minute charts, the opportunity's gone. You are late to the party. Now, I would rather spend less time under the guise of bunny fingers time analyzing the charts and just focus my attention on a systematic approach on one time frame. That means that I can be time efficient and not have to waste time doing some bullshit analysis trying to convince myself there's an opportunity. I would rather have a rule-based approach with one time frame, on any time frame for that matter. At the click of a button, you can validate the strategy that you're using, whether it's our strategy or someone else's strategy. I don't care, as long as you've got a strategy is the point. And then you can determine that, yes, this ticker symbol, this forex, this crypto, this stock, this time frame is valid for this strategy. And all I'm using the strategy for, I'm not trying to say that it's a miracle time frame or a miracle strategy. I'm just trying to validate that, yes, I've got the right strategy, the right instrument, and the right time frame that suits my requirements. That means that I can build a portfolio of opportunities. Again, what we teach all our students is we have top 25 stocks, the first tranche of 25 stocks, because what we don't know is which setup's going to work. So I've got to take every setup with consistency when it's set up. So we trade a portfolio, we trade the same strategy on all 25 stocks, one time frame, and it sounds like a lot, but it also it's not, because that's your universe. There's nothing else for us to consider, and then I don't have to look at 25 stocks on the weekly, the daily, 60-minute chart. I don't have to do this drop-down analysis. You do it on one time frame, one ticker, two tickers, three tickers, and before you know it, 2 hours have disappeared. And the reality is if you know what you're looking for a Bible dip and a sellable rally, as we defined to all of our students, then it's just a case of, is it there, is it there, is it there? We're never asking ourselves, where's the trade? Which is what people do with most analysis. Where's the trade? I'm looking for the daily, the weekly, the 60-minute chart. I'm analyzing the charts, asking myself the question, where's the trade? I'm trying to use the sum of all of my knowledge to try and find an opportunity. Again, asking the question, wouldn't it be far easier to say, well, I've got a strategy. I know that over the last 20 years it's worked on this stock, and all I've got to do is wait for the setup. And then it's a case of, oh, there's the trade. You're making statements. And I think when you shift the perspective from asking questions of where's the opportunity and applying discretion to multiple time frames, which is time consuming. Again, I'm not denying that it works for some people, but I want something that our students can emulate. I mean, something that you can emulate regardless of your experience is far better than trying to figure it out and the make it up as you go along method and the discretionary observation or analysis and the price action of behavior, and is that support really support, and is that resistance really resistance, is it good resistance, how do you qualify it? And the other bullshit is the angle of the trend line. Oh, don't get me started on the other bullshit analysis things. The angle of the trend line needs to be 30 degrees. Well, just change your fucking resolution on your monitor.
You know what?
You know, it just...
Put the book under one end of your monitor and suddenly it's 30 degrees, you know?
I know, but you know what, just put more data on your chart and squish it up. That angle's going to get steeper. You know, for fuck's sake. But you get the point. It's you're making it hard work for yourself doing it one way versus pressing the easy button when you've got a systematic approach to find, filter, and sort opportunities that is rule-based, and you stop asking questions of where's the trade, and you shift very confidently into, oh, there it is. There's the trade right there. That's why you refer to production line. Sorry, Sean, do you have anything to add to that?
I've been there. I've done this. I've done the multi-time frame analysis, and you know what? It's absolute bullshit. Yes, it works. Yes, there's other ways that are far more efficient. If you want to look at the weekly, trade the weekly. If you want to look at the hourly, trade the hourly. If you want to look at the daily, trade the fucking daily. Whatever time frame suits you, that's the point to hammer home. If you don't have the ability to sit there looking at the hourlies and trade the hourlies, then don't fucking trade the hourlies. Trade something that's more in line. We primarily trade the dailies. If I wanted to be even more passive, I could look at the weeklies. That's fine. But you know what? I find the dailies works best for me and my lifestyle and what I'm doing. That's where I'm going to trade. I don't need to look at the weeklies. I don't need to try and look at the hourlies to finagle the perfect entry because all the stars aligned. I don't have to spin around in my head 3 times and, utter a little prayer as all 3 align and off we go. No, I just look at it. There's the trade. Boom, off we go. Place a trade. Trade sets up. Trade goes on. Get on with my day. I like it that simple. Multi-time frame analysis
trade-off is
is
time, isn't it, Sean? Trade-off is time. As soon as you start to do any type of multi-time frame or finessing and fine-tuning the entry, you then suddenly sat there in front of the computer doing the thing that we hate. You're watching every little fluctuation in price, you're trying to finesse and fine-tune an entry, and you're looking and you are asking the question, where's the trade?
You also talk yourself out of good trades and talk yourself into bad trades.
Because it's discretion. Again, does it work? Yes. Is it consistent? Mostly no. And I've done it both ways. I've talked myself into trades. I've talked myself out of trades. But what we're doing right now is this is probably some of the most relaxing trading I've ever experienced. Is the trade there? Yes, it's on. It's Bob the Builder, Sean. Bob the Trader. Is the trade there? Yes, it is.
Yeah, can we do it? Yes, we can. Absolutely. So, listen, we do have a hard stop coming up, guys. And while we have gone around the not beaten around the bush, we've pretty much gone for the fucking jugular here today. But that is all we got time for in this week's show.
That's all for today, folks. If you like what you heard, be sure to follow and listen to the very first episode, several episodes now in fact, where I map out my most profitable money-making patterns and strategies. And as always, thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. And until then, toodaloo trader. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.